Good morning, guys. The COT data video for the week beginning the 24th of February 2025. We had a big risk-off move yesterday, and the rumour is that there's this new virus that's spreading through China, but I'm going to call it like a ruse in order to get people to short, because what's happening is that the herd are going to be looking to buy. This is a scary news event to get them to sell. So, you've got to be careful. It's all like a psyop, and they need people to remain fearful. Also, secondly, don't forget with the COT data file, we do have a thing called the COT index charts. So if you were particularly interested in a currency pair, it will tell you which one is stronger of the two. And like, for example, the euro pound, we can see the euro has been weaker than the pound. And so therefore, that's your euro pound bias, for example, okay? Then, got different permutations and stuff. The yen has been stronger than the pound. Therefore, you'd look to buy yen over the pound, or sell pound yen at that point of the crossover, okay? So let's come back to the net non-coms. We had an uptick on the euro. And don't forget, we've got the German elections as well. So we might probably see a gap, and we may gap up or we may gap down. It's impossible to say because we don't know the outcome of the German elections. So it's quite tricky. 64,000 to 51, so definitely ticked higher, but of the two, the dollar is stronger, and we did tick higher slightly. And do note, we haven't really gone below zero. We had maybe 2 weeks there. And that was it on this whole time frame since 2022. It only dipped below zero, okay, just very, very briefly for those 2 weeks. So that's the Euro USD. So, like I say, it's a lot of uncertainty with the euro right now. The hurdle got chopped completely. The sentiment is whipsawed, and the QE bot 1.0 has encountered quite a lot of loss due to this whipsaw and that we're seeing. Let's look at the yen. The yen has been strong, so let's see if we see continuation. We are, so that's interesting. 54 to 60, so it's continuing to rise. It isn't as big a move as I thought it would be, but it's still a move higher. Okay, so the yen is strong, and it's stronger than the week prior. Okay, euro off, Aussie on. Aussie's ticking higher. 75 to 56, so it's definitely an increase there. We are still quite far from the euro, but they are buying the Aussie. Okay, there's a lot of chop and mess. So if you're looking for trade signals, it would have been quite hard over these few weeks there. So definitely very messy up there. Aussie off, pound on. Slightly higher. Oh, it's just negative, but so it's a tiny increase. It's almost as though it's gone sideways, but there is a tiny difference from the week prior. It's like 500 contracts less. So they're negative, but at the net level, but it's not. They haven't got enough motivation to push it above the positive, so that might be a bit ominous. We have come quite strongly off the high, but we've got this support. So we could be a little bit range bound, maybe. It could be looking at the euro. It may be looking for signs and direction from its cousin there. And if the euro pumps, maybe the pound will follow. And obviously that's a lot to do with tariffs as well. And the pound isn't subject to the tariffs, but the euro is. Is the pound strong enough to fight the dollar without the euro? Probably not. And so this is maybe why we didn't see much of an increase there. So a tiny, tiny increase. Pound off, CAD on. CAD has ticked higher. It's very, very negative there though. 160,000, and we've come to 144,000 minus. So it's very negative, but we're coming off those lows. Okay. CAD off, gold on. Cut it down. So that's going to be of note. 302,000 to 268. So there's a big decrease there. And I wonder if there was a head and shoulders, like I was saying. So And then keep an eye on that. Be careful, and you could probably argue we really rallied on the sentiment. The herd have been so bearish, and so if they flip long, then it might be quite bad because this is ticking down. And if you get the COT data to agree with the retail sentiment data, it can be quite effective. So be careful there. I wouldn't be necessarily bearish because gold's put in 16 bullish months. So if you were to fight that, it would be a little bit crazy. It'd be very, very counter trend, okay? Which is bonkers, really. We've had 16 months of just constant grind, basically. So yeah, be careful there, I think. Might be ominous there, right? Pound, gold off. New Zealand. I will quickly look at the peso. Sideways and nothing to comment on there. So just sideways. We're looking at that orange line that hasn't done anything at all. Peso off. New Zealand dollar on. Slightly lower. 52. And we've come off from 47. So a 5,000 increase of shorts from the net non-coms, the banks and institutions. So that's of note. We might break that low. Don't forget we were range bound for ages and ages, and we're breaking that range. So of note, it does signal some weakness in the New Zealand dollar. And also the herd have been very undecided on the Kiwi as well. The bubble left, right, and then it went left, then right, and then I think it went left again. So basically it just whipsawed back and forth all week. And we had a bit of a discussion about the New Zealand dollar in Discord, and I was trying to work out why the retail herd was so subject to getting involved in that particular currency more than others, and also the frequency of them changing their mind was really great as well. And I was trying to work out why. I asked the co-pilot and it didn't really know. And I don't think that their herd know either, and that's the difficult thing, why they are so whimsical with their New Zealand dollar position. So be careful there. The COT data is signaling sell, so that's like a big picture view, okay? And the New Zealand dollar off, and then we could probably start looking at the ruble, but I don't know if it's going to tell us much. Oh no, we can't. All right, we'll have to tell Christian about that. I mean, it might be right. Oh, this may be to do with the sanctions. This is, I don't know. That's very interesting, isn't it? Yeah, it's about 2022. It's around about that. So I'll have to speak to Christian about that. That's really interesting. It just goes to show we never checked it in all that time. And then we can look at the Swiss franc. And we are just kind of range bound, really, between that low and that high, and we've just gone sideways. It's worth noting, just to promote the spreadsheet, and this new 2.0 logic, we're looking at volume delta flows, and these are the setups it was suggesting that we should take, and these are risk-off trade setups. Okay, so obviously if that falls, the dollar's going to strengthen, so that's risk-off, and if the euro outperforms the New Zealand dollar, which is riskier than the euro, that's risk off as well. Likewise, the Aussie is riskier than the CAD, that's risk off, and also the dollar is the Swiss franc is a riskier currency than the USD, although that kind of be a little bit debatable because they're both safe havens, but it did signal risk off. And then we come to the trading view. I'll show you the ES, which is your E-mini S&P futures, and we had this big move. So the sheet indicated we'd have this big decline. It came out about 4 o'clock, and yeah, so there's about there 3 o'clock. This is a 2-hourly candle. So in this candle, we had a big heads up that would see a risk-off move, and so therefore we saw it, and the sheet predicted it on the currencies, and all trades went green as well. They all went profitable, and you can see the you can see how it could work as long as the fundamentals agree. So we could have like not done that move and then pumped, and then it would have been at a loss, but it was right, it forecast it correctly, and it's important that you understand that how the currencies work with risk on or risk off flows, especially if you're trading like the Aussie, for example, or the yen or the Aussie USD, because obviously the Australian dollar is riskier. And so if the indices are going to rally, the Aussie should rally as well with the indices. So I think what will happen with the S&P will come down to supports. And the thing is, we're well supported. So we could have potentially just had a little bit of a topping out scenario, come down for support, and then we're going to bounce, and it'd be like, oh, what we all getting worried about on Friday, and we can laugh about it. And it's just basically just the nature of price action. It has to come down to support for the next leg. And like I said at the very beginning of the video, they're trying to produce some scary news event in order to get their herd to sell, because they can't be buying. If they're going to be buying en masse, then there has to be someone to take the other side of that trade. And it's those big fish that have to take the other side of the trade. And they don't really want to be selling indices, they want to be buying, right? So remember, everything is like a psyop. If you see something on the news, don't believe it necessarily. And remember to trade safely. And I'll speak to you guys on